How are you doing, traders? Yes. Woo. I love it. Colombian coffee. The best. The best. All right. Guys, I hope everything is okay. I hope you are raring to go. We have an amazing opportunity here today. Amazing opportunity here to discuss some very interesting things. I hope the video's okay. I hope the audio's okay. I just want to check with my team to make sure all is okay. I need them to let me know before we get started, but I'm ready, guys. I'm ready. I hope you are too. Everything okay? Yeah. Let's do this. Let me know if everything's okay, guys. I want to hear it from you as well. Video's okay. Voice is okay. Quality's okay. Let me know. Let me know. All right. All right, traders. Is all okay? Video, audio, great, awesome, fantastic. Got the answer from you before my team. That's amazing. Thank you. Thank you. Okay, awesome. Traders, welcome to another live event. I actually love doing these things. I typically try to do a major live event here every single month, and I do try to mix up the topics so that we cover a great many things over the year. Today, I'd like to revisit talking about wealth accumulation and how important generational wealth moves are for every individual, especially today. Now, I know that there are a great many people, traders, who live the vast majority of their lives just worried about how they're going to put food on the table, how they're going to pay for the roof over their head, and I understand that. But even at that level, there are some things that every single individual can do to ensure that they are staying ahead of an inflation curve and preparing themselves to pass something on to the next generation. I believe that it's virtually every single person's responsibility to ensure that the next generation is actually better off than their generation. And this is the way that we build our family lines. So today we're going to be talking about specific things. I'm going to try to convince you why this activity of building wealth over your lifetime with simple things is so important. I'm going to show you how I have done it and continue to do it. I'm going to leave you with some specific wealth building tactics and techniques so that after this presentation, I promise you, you'll be able to take some of the very same steps that I take in some of the same asset classes that I take and do relatively, if not extraordinarily well. All right. So let's get started with that. I don't want to keep you too long today. I know it's a holiday weekend for many of my individuals here from the United States. It's Independence Day. Of course, if you're from the UK or Great Britain, you call it Treason Day. But, history is from whatever perspective you like. All right. But without any further ado, what I'd like to do is get us started with today's talk here. Da, 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 ba-bum. Yes. And so, how to invest in long-term and create generational wealth. Now, first of all, I am going to have to very briefly, for the benefit of those who have no idea who I am, because every single time I have a free event, I have literally hundreds and sometimes thousands, depending upon the size of the event, of individuals who join the event who have no idea who I am. So very quickly, of course, my name is Oliver Velez. I am the founder of a company called iFundTraders.com. I was the original founder of a company called Pristine Capital Management, which many people in the industry knew for many years as Pristine.com. Pristine.com, over a 12-year period starting in 1994, went on to be one of the most recognized financial pioneering firms during the 1990s. Okay. iFund Traders came into existence when I branched off and decided that I would start to fund my traders, thus the name iFund Traders. I have a 36-year professional trading career, 40 years of trading in total, but 30 years as a true professional. I was chosen by the entire trading community all the way back in 1999 to be the face of the industry. I was the inaugural keynote speaker of the first industry event in 1999. I also repeated that role in 2000 and again in 2020, actually last year. I have trained tens of thousands of traders worldwide. I have been training traders since the year of 1993, okay? And I am the best-selling author of 5 international books on the topic of trading the markets for a living. My 5 books are written in English, Spanish, Japanese, Mandarin, and German. I currently train and fund as many as 5,000 plus traders around the world. Now, I train a lot more traders and fund a lot less traders, but the army of traders that we have worldwide spans over 96 different countries. I'm very proud of that. And I continue to be an international speaker and advise companies around the globe on financial affairs. So that's who I am. Here's a quick news article on my inaugural talk at the first International Traders Expo all the way back in 1999. This is an article very quickly where Barron's, which is the Venerable Barron's, this is the #1 go-to financial weekly for institutions, hedge funds, professional money managers, and international brokerage firms all over the world, where they ranked me the #1 source to go to for anything trading related in the United States. This was done in 1998, and that's February 16th, 1998, if you can see that date in the upper right-hand corner. This is a visual of some of my books that are written in various different languages. Today, I'm very proud of the fact that I am not only one of the most published professional traders in the industry today, my books outsell all the other trading books combined. And I believe that's not by mistake, okay? If you're looking to see which books that you might be interested in, all you have to do is Google and search Oliver Velez books, and you'll get a whole list of my work. This is where you can follow me. So if you find that this presentation is interesting to you and you would like to follow me on my various social networks, I strongly encourage that you do that, because I make sure that every single day I do put something of value out there in the social media world for those individuals who are interested in trading professionally, and of course building wealth and building generational wealth over a lifetime. So that is who I am. And today, as I mentioned, we're going to talk about wealth accumulation. Now, a lot of people, traders, know me more as as a short-term oriented trader. I have built up an international reputation for being one of the pioneering day traders. I started my trading career in December 6th of 1986 on Wall Street. And I had a very illustrious 8-year career, which led me to leave Wall Street to form my own off Wall Street firm. That firm attracted other Wall Street firms as my clients. So my first clients were other Wall Street firms who would send me their traders to be trained in my particular style of trading. I also provided research to virtually all the firms on Wall Street over a 12-year period. And because of that start on Wall Street as a short-term oriented trader, my international reputation grew more as a short-term oriented trader. But what a lot of people don't understand is that I have over 98% of my wealth in wealth generating plays, and about 2, sometimes as much as 5, depending upon where we are in the market, anywhere from 2 to 5% of my capital is deployed in short-term oriented trading. And I believe that both are necessary. There are times in the market where being short-term oriented is actually preferable to being a long-term holder. But over time, there's a difference. I want people to understand that there's a huge difference between income generation and wealth accumulation. Your income generating activity should be designed to give you the ability to begin socking away for wealth accumulation. Okay? And so the goal of every short-term oriented market player is to be able to generate more income than you need to live a very, very good life. And the excess that you don't need to live that wonderful life should be put into wealth generating plays. And so that's what I teach my traders to do, to bridge these two styles of market play together, that you don't choose whether or not you want to be a short-term oriented trader or a long-term investor for wealth accumulation. No, you need them both. Okay. So income generating is very, very good. All right. We need to have that high productive income generating trading that goes on, but we need to move that trading to a level that is generating more than we need to live a wonderful life. Never, in my opinion, I tell my traders at least that you should never be looking to not live a wonderful life, a comfortable life. Okay. Once you are generating enough income to live a comfortable life, then you must work on accelerating that income production to go beyond what you need. And the amount that is beyond what you need is what should be deployed in your wealth building or wealth building activities. And that's what we're going to talk about today. All right. Okay. So let's get started here, guys. Let's get started. Now, what do we need? What we need to know. I've got to lay some groundwork here before we get into the strategies. And this groundwork is very important. It's going to serve as the foundation upon which you're going to understand why you're going to take certain actions. There are 3 types of markets that need to be understood. And I'd like for you all to maybe take some notes. Don't take them too copiously so that you miss what I'm saying because you're writing. but I do strongly encourage that you take some notes here. Okay, so there are three types of markets, and you need to understand all three types of markets. Okay, there is this boom bust. There's a boom market, there's a bust market, and there's a flat market. Okay, and we all know this. Some people call the boom part of a market cycle the bull part of the market cycle. The bust they call the bear, and we have flat markets. And what a lot of people fail to realize is that the market predominantly vacillates between these three states. The market can only do three general things: go up, go down, go sideways. And if you know how to handle, you have specific tools and tactics that are specifically designed for the up part of the cycle. All you have to do is identify when a market is in its boom cycle and pull out the tools that are up tools. And when you identify that a market is in the bust part of the cycle, you need a tool bag that, I'll put this here. I know my writing is a little terrible here. You need to pull out your down tools, your down market tools. And when the market is sort of going flat here, you need a tool bag called flat tools. Okay, and so once you have tools that match each part of a market cycle, all you're responsible for doing is identifying which part of the market you're in, which part of the cycle you're in, and then to pull out the proper tool bag. All right, so up tools go with the boom cycle, down tools go with the bear cycle, and flats can go with the flat market environments that typically appear at the tops and bottoms. All right, we're going to talk a little bit more about all of this in detail. Now, which markets? There are, from a macro perspective, there are markets that perpetually, not cyclically, there are markets that perpetually are boom markets, which means that long term they are almost forever boom, which means that they never go bust, they never go flat in a way. They are perpetually boom markets. This is important to understand. Which markets never go down over time? Yes, there are markets that never go down over time, traders. That over time, they go down temporarily, but over time, even those down movements generally produce an upward trend forever. Yes, there are markets that do go up forever. That's right. Then there are markets from a macro perspective that go down forever all the way until they disappear. Now, this is important to understand, traders. This is very important to understand here. There are certain markets that exist that are designed to, over time, vacillate up and down, but the general trend is to go all the way to zero. They're specifically designed to do that, to go to zero. Which markets are they? And if you don't know which markets are designed to go to zero, you'll never really be good at generating wealth, because the idea is to transfer what you have in the markets that are designed to go to zero and move it to markets that are designed to never not go down. There are markets that are designed to go up perpetually forever. And there are markets that are specifically designed to go to zero. And repeat, another market comes into existence, it's designed to go to zero. And repeat. Now here's the interesting thing. The vast majority of people who do not ever generate any value, that never generate lasting value, lasting wealth. Wealth is to be defined as it's beyond what you need for a decent life. That's what I consider to be wealth. What you need beyond paying your bills, beyond your food, your home, beyond going out every now and then to dinner. Wealth is what you don't need to live a good life. Now, there's an interesting history about the human species, the human race, when it comes to wealth accumulation. You see, for thousands of years, traders, the human race was not an accumulator. All right? That the human race largely were nomads. They traveled from location to location, right? Looking for food. Not looking for anything else but survival. All right? They packed up, moved to this location when they felt that food was better to be found in this location. And when that location dried up, the whole entire clan picked up all of their possessions and moved to another location to determine where food is more readily available. All right? Now, this is very interesting to understand. This is not the state at which human beings started to focus on accumulating anything. The idea was to accumulate nothing. The idea was to be light, to be able to travel, and to be able to move from one location to the other at the drop of a hat. When scarcity became less and less, and food became more readily, and the need to move from one location to the other started to wane, people started to stand still in the same area, raise their families without moving too frequently. And when scarcity became less, people began to have a little bit more than they needed. They didn't necessarily go hungry from week to week. And so they began to store what they did not need for today. They began to have a little bit of extra. This storing of food that I don't need today, all right, was the beginning of the accumulation of wealth. And so at this particular turn in human history, the people who had bigger stores were considered to be more important, wealthier, more capable. Their families were safer because if a drought ever occurred in food, they were fine because they had stored up enough of reserves to survive the temporary shortage. This standing still and storing, staying in the same place, built property rights, which we're going to talk about. So instead of moving as nomads from cave to cave and forest to forest and land to land, people became more stationary. You understand? And this more stationary lifestyle caused people to sort of say, well, okay, this is my piece of land. This is where I'm going to settle right here. Property rights. This is my right to have this area is mine. And then because scarcity began to wane, people began to have more than they needed, which caused the need to store and to begin to accumulate. Now, the people who stored the best were considered wealthier. The people who never stored would wind up working for those who did store so that they could survive. Now, do you see how important becoming a storer is? I mean, history tells us that the storers actually will get to a place where they support the non-storers. The wealthy support the non-wealthy. It's all about storing. Now, what's interesting in this history as well is that as certain people who were able to generate more than they needed and to begin to store, these people began to need protection from some of those who did not store, because those who did not store would sometimes see someone who did store and want to take what was stored by that family or that person. And so the storers began to need protection. This is what began to bring about governments. Governments came into existence because of wealth accumulation. There were no governments. So a group of families would get together and say, John, you are in charge of protecting the region for us. We'll take care of your family. We'll take care of everything you need. You don't have to work. Your job now is just to protect the region for us. Government selected official to protect the region. Governments came into existence to protect the wealth of accumulators. That's their only purpose. So many people feel that so many people believe that the government's purpose is to help those who don't have. Wrong. You do not know the history of how governments came into existence then if you think governments were designed to help the poor. No, governments came into existence. Elected officials came into existence to protect the accumulators, to protect the wealthy. And if you do not make the moves to transfer, to switch, to convert yourself from being a liver to an accumulator, from being a survivor to a collector of property, a collector of certain rights, a collector of certain assets that don't go to zero. If you don't make the moves to do that, you will forever be in the cold, because no matter what the marketing is, governments came into existence to protect the wealthy, and it will never change. Ever. Ever. Do you understand? Ever. Now, some people say, well, Oliver, how can you say that? Because governments do give money to the poor. Well, it's not a common thing. Some of your more developed nations give it to the poor, give certain things to the poor, but why? Just to keep the peace. The lion's share always goes to the wealthy. What happened during the calamity of last year? The wealth gap greatly increased, right? The wealthy got tremendously wealthier. It was the biggest year of their lives. 2020 was the biggest year of my 40 years in the market. I'm not the only one. Amazon had the biggest year. Many of your billionaires increased their wealth by 30%. The best years of their careers as well. But what happened to those who are not accumulators? What happens to those who did not have the assets that benefited from what was going on last year, but instead had the assets that go to zero over time? Their plight got worse. This will never change when you understand the history of money, and you understand the history of governments, and you understand the history of accumulation. You become almost crazy about the need to switch yourself from being a liver and a survivor from day to day to an accumulator of the correct assets that will give you the right rights and will put you in the right place to benefit from things like last year, instead of be on the hurting side. All right, guys. So very, very important. History is God in a way. It's so very important. If you don't know where you've been, right, how can you possibly know where you're going, right? Okay, let's get started. Now, this is an image of what I call a boom, bust, up market. So what do I mean by a boom bust up market? What I mean is that this market has boom periods and it has bust periods. See the bust periods? Bust. It has boom periods, boom, and it has bust periods, boom. But even though it has these medium term cycles up and down, its general trend over time is up forever. That's right, forever. Okay? That's very important to understand. This is the boom bust. You always are going to have booms and busts in the medium term, but long term in this market, it's going to go up forever. Now we'll get into these things a little more involved in just a moment. Which markets are boom? So which markets are these? Which are the markets that go up sometimes and down sometimes, but over time they go up forever? Let's look at those. All right. Now I want you to take a look at this. Take a look at it very carefully, traders. Take a look at it very carefully. Let's look at the items. Let's look at the specific markets that go up forever. Gold. Gold is an asset class that has been going up for over 5,000 years. Now, in the beginning of those years, it went up a lot more dramatically than it goes up today. Today, gold rises on average about 1.9% a year. But it's freaking 5,000 plus years old. All right? Think of a young 24-year-old and then think of a 94-year-old. Okay? So when gold was a young 24-year-old, it was going up a lot more dramatically. Today, it's a 94-year-old, right? And it can inch forward, but it still continues to inch forward. 5,000 plus years. Look at silver. A lot of people don't understand that silver is actually older than gold. There was a time where silver and gold were on equal par in terms of their value. Now there's a dramatic difference between the price of silver and the price of gold. Gold overtook silver, but silver's been in existence for 1,000 years more or less than gold. And it has been going up for 6,000 plus years without fail. Oh yes, during those 6,000 years, boom periods, bust periods, but over the long term, it has never stopped going up, ever, never, never. There's art. Guys, you realize that art has a 90,000 plus year history and that art has never stopped rising in value, ever, in 90 plus years. Collectibles are amongst the oldest. Art's the oldest, but then people began to make art to wear, to hold, to carry. Not just the art on the wall of a cave, but they began to make art to carry, to hodl, to hold. Collectibles have been going up over time for 23,000 years. Today, that would be coins or watches and things of that nature. Baseball cards, sports cards. Then there's farmland. Now, we're not specifically talking about real estate in general. We're talking about farmland, the land that actually is used to produce food. Farmland's been going up for 32,000 years. Then there's rare real estate. Rare real estate's been going up without fail for 50,000 years. And then we come to the final, Bitcoin. The baby. Bitcoin's the baby of the bunch. It's the new kid on the block. It's only 12 years old. And yes, it fits in this market category that will forever go up forever. When people say, well, Oliver, how can you say that Bitcoin is going to go up forever? And I always say, well, look, gold's been going up for 5,000 years, silver for 6,000, art for 90. How long has the stock market been going up? How many decades? How long has Amazon been going up? How long has Apple been going up? Traders, listen to me carefully. Very important. Listen to me carefully. When I speak, right, I speak to people who aren't familiar with financial markets all the time. And it's sad in a way that certain basic financial facts are just void in the general public. Most sound markets go up for many, many decades. Sound markets go up for many decades. Sound assets go up for thousands of years. But if we take, for instance, just the stock market, the stock market has been, let's take it from 1933. If we were to look at the stock market from 1933, all right, you have a multi-decade run right up until today. So how many decades is that? How many decades has that market been going up over time? And let's go inside of that market. I placed my first wealth buy in Apple at a split adjusted price of 60 cents. Apple has been going up for 42 years. 42 years. Microsoft's been going up for 44 years. Amazon's been going up for 24 years. 24 years. These are the baby ones, right? This is getting more baby. Google's been going up for 22 years. Bitcoin's been going up for 12 years. So why can't the baby Bitcoin go up for 40 years, 100 years, 1,000 years? If gold's been going up for 5,000, silver's been going up for 6,000, real estate's been going up for 50,000, art's been going up for 90,000. All right, the stock market's been going up for many, many decades. Why can't Bitcoin go up for many, many decades? And it's one of the soundest markets, the newest, the more improved market. And we'll talk a little bit more about that. It's important to understand which markets are designed to never go down. Now, notice, guys, on this list is not the stock market. Check this out. Remember? Don't get it twisted. On this list, you don't have the stock market here. The stock market is not one of those markets that goes up forever. Gold is, silver, art, collectibles, farmland, real estate. Bitcoin falls into the category of a market that is designed to go up forever because of its scarcity. That is what is the common theme of all markets that never go down over time. They go up over time. They have their bust periods, but over time, they will forever go up because of scarcity. Gold is not something that grows on trees. Gold is not something that you can mine very easily. You produce gold with tremendous effort, years of planning, research, scientists, machinery, manpower. It's not easy making it a relatively scarce item. Silver is mined a lot more easily. Therefore, its price in relationship to gold is far less. It's still relatively scarce. It's not like, I don't know, it's not like grass, but the difference in price is related to the scarcity element. Silver is far more readily accessible, therefore its price is way less than gold. All right? Art. There's only one Mona Lisa. Art is typically scarce. When art becomes valuable, it's valuable because there's only one, or at least a limited edition of the art. So all markets that are built on scarcity will go up forever as long as there's demand. There will be demand for gold. There will be demand for silver. There will be demand for art because it's been going up for 90,000 years. There will be demand for collectibles. They've been going up for 23,000 years. There will be demand for farmland. There will always be demand for real estate. And because Bitcoin is capped at 21 million Bitcoin forever, because 6 million of those 21 million Bitcoin have already been lost, because 86% of the 21 million Bitcoin that can ever be produced has already been produced. 86% has already been mined. And 6 million of the 21 million Bitcoin have been lost, making this the scarcest asset in the world's history. Which I'm hoping to convince you will go up more than every single one of its brothers on this list. Why? Because if scarcity is the reason that markets go up forever, then the most scarce asset of all time must go up bigger than all the other assets forever. Scarcity plus demand is the key. Scarcity plus demand is the key to wealth. It is these markets that you must, I gotta look at you here, guys. I gotta look at you because you've got to understand this. It's so important. You have to make income. What you normally make income with goes down forever. So you make income. That income that you've made that is now in your hands is not designed to go up forever. That's what's designed to go down to zero. Now, if you keep it in your hands and save it, it's just going to continue to erode all the way to zero. And what's interesting is that the world is taught to do that. The world is taught to save, not accumulate. There's a difference between saving and accumulating assets. They're taught to save currency, save dollars, save pesos, save euros. The world is taught that to save. Poor people save. Wealthy people accumulate. wealthy people convert their income to assets that go up forever on that list. They play other markets that don't necessarily go up forever, but only to increase. They play them temporarily to increase what they can put in assets that go up forever. You cannot meet a wealthy person in this world that does not have a good portion of what they have in items on that list I just showed you. This is misunderstood, that wealth is looked at by the vast majority of people in the world as he who has the most dollars. And this will keep the majority of generations poor, that belief. No, dollars are converted to things on that list. That's how you stay ahead. And this is what I need to convince you before we finish today. You understand this? I hope you understand this. Let me know if you understand this. I'm going to wait. Tell me if you understand what I'm talking about. Tell me if you're picking up what I'm laying down. All right? Tell me if I'm boring you either. Am I boring you? I hope not. Do you understand this? Let me know. I want to see you right now. I want to see you. I'm not going to move until I see you tell me, yes, Oliver, I understand what you're saying. Yes, Oliver, I'm picking up what you're laying down. Yes, 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 yes. I'm looking for you right now. Let me know. I was going to drink coffee. I'll put some music on. Yeah. Let me know. All right, got it. Good. All right. Enough of the music. Let's go. Good, 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 good. Thank you. Thank you for letting me know, guys. Thank you for letting me go. Let's get back. Let's get back to things now. Got a lot to cover with you here today. Now, this is called the boom bust down market. We covered the boom bust up market, but this is a boom bust down market, which means that it's a market that's going to go down all the way to zero. Yes, many markets go straight to zero, but over a long period of time. Some go to zero over a short period of time, but we're talking about the markets that go to the zero over a relatively medium to long period of time. All right. Now, this market as well has boom periods. This is what fools people. So this market can go up, but it goes down as well. So it has periods of up. It has periods that trick you in believing that it's a strong market, but that strength is only temporary. These markets have these periods that go up, and it fools most of the world. It fools them into believing that this is a sound market, but over time, it is not a sound market. That upward move is just a release move. Nothing goes down in a straight line. You always have it go down like that. And you cannot get fooled by these markets that go up. Now, let's look at which markets do this. Which markets are the markets that go up sometimes, but over time, they go to zero? Well, let's look. Take a look at that list. The US dollar. Yes, I understand that the US dollar is the world reserve currency. Yes, I understand that the US dollar is sought after by a big portion of people in the world that have poorer or worse currencies. It might be the strongest of the bunch, but it is designed to go to zero. In fact, the dollar is close to zero now. The dollar has lost 98% of its value since 1913. 98%. It's only got 2% left to go. And yes, I'm going to throw every single currency in the world, every single fiat currency in the world in this list. The euro, The euro will go to zero. The yen will go to zero. The renminbi will go to zero. All fiat currencies go to zero. Zero. People say, Oliver, come on. How can that be? Well, listen to me carefully. Look at this. Listen to me carefully. I got to look at your faces again. You're just so, that's beautiful. That's why you're beautiful. Yeah, you're beautiful. So check this out. How old is the euro? The euro's not that old, right? The euro came into existence to do what? To replace other currencies that failed. So listen, guys, when a currency fails, they don't call it a failure. Oh, no. They don't say our currency has collapsed and failed. No, they call it a restructuring. But we now know what restructuring means, right? It means that your other stuff went to zero, got so crappy that you're now coming up with a new currency and calling it a restructuring. But no, currencies all go to zero, not a single one. Do you see any Roman frickin' coins floating around today? Right? All right. All right. What about the German mark? Any of those floating around today? German mark? Yeah. The French franc? Not Frankfurter. The franc. No. All currencies go to zero. Now, I want you to do something for me. I'm going to look at you. I need you to do this for me, and I need to watch you do it for me. Someone do this for me. Okay? Someone do this for me. I need you to Google average lifespan of fiat currency. Do it for me now and type the answer in here from me right now. Just a few of you. Type it for me. I'm not going to move on until you type it for me. Just Google that. Do it right now very quickly. I won't move on. So Google average lifespan of fiat currency. Okay? Type it in. I want to see the answer. I'll sip on coffee and play some music in the meantime, okay? That's right. There we go. Music's off. I'm starting to see the answer. That's right. I want to see a few more. Yes, that's right. That's right. 27 years. Did you hear that? The average lifespan of a fiat currency is 27 years. Gold's been going up for 5,000 years. Silver's been going up for 6,000 years. Art's been going up for 90,000 years. Do you understand this? Farmland's been going up for 23,000 years. Real estate's been going up for 50,000 years. Fiat currency goes up and crashes in less and on average around 27 years. So this is what you want to save in? Really? You don't want to save in the others, but you want to save dollars? You want to save euros? You think wealth is in that? You think that the goal of life is to accumulate as many US dollars as you can? That's what you think wealth is? Then you've bought the lie. Some currencies, now remember 27 years is the middle. So some currencies last 50 years. The dollar's at its 50-year mark as fiat currency. The dollar became fiat currency in 1971. Do you understand this? The dollar was not fiat currency. Fiat currency means that it's not backed by anything. There's nothing that restricts its supply, that a single individual can press a button and print more. It's not backed by anything. That's what fiat currency is. Well, the dollar was not fiat currency until August of 1971. It became fiat currency. Because of its world reserve status, it has enjoyed a slightly longer life than your average currency, 27 years. But is that about to end? Oh, yes. Now, people might be saying, Oliver, how can you say the dollar is going to end? I give it 10, 12 more years. Zero. Totally. It's already down 98%. Zero. Do you understand? People say, Oliver, how can the dollar go to zero? It's going to zero. All of them go to zero. There is not a single exception you can show me. Every single one goes to zero. But remember this, it's going to be called something else. That's where the trick comes in. The trick is going to come in that they're going to replace the US dollar with something else. And they're already talking about it, aren't they? It's called a what is it called? A CBCD? A central bank, CBDC, a central bank digital currency. See, before it was called, we're gonna put these to rest. They're dead, and we're gonna call it the euro. Or we're gonna put this to rest, and we're gonna call it a CBDC. They're already planning to put the dollar in its current form in the frickin' grave. It'll be marketed as something else. It'll be marketed as if we're just changing the name of it. We're changing the nature of it. That means the shit went to zero and something else has to be created in its place. You understand? Don't buy the hype. You make currency and you better flip that stuff to something else. Otherwise, you will forever be poor. My mother used to say, Oliver, never say never. I'm saying, Mom, I'm saying never. Again, never. You will never be wealthy and you will forever be poor if your whole life is about generating dollars, fiat currency. This is the game of the poor. Do you understand? You have to become an asset owner. Whatever you do, your every waking moment should be dedicated to becoming an asset owner. You owe it to yourself. You owe it to your family. You owe it to the family that hasn't even been born yet. You owe it to generations that are going to come after you. You want to live your life in a fashion today where your name will be in the mouths of people that aren't even born yet. And they will speak your name on their lips because of what you did. This is what should drive you every single moment after you wake up every day. This is what should give your life purpose. To escape from this fiat death game, which cripples a tremendous percentage of the world. This fiat game cripples. Look at Venezuela. Look at Argentina today. Look at the struggles because of fiat currency. Look at Zimbabwe. Look at Turkey. Look at what's happening in Lebanon. Google it. That stuff doesn't even get in the news very often. Things are collapsing around us, all fiat connected. But now look at gold, up near its all-time highs. Look at Bitcoin over the last year, up over 700%. And that's with the recent decline. You can't stay in this group of people that just works for dollars. You will forever have a life of struggle. Oh, yes, forever. Do you understand that at the current rate of dollar printing, that every dollar goes to zero in 15 years? That the value of a dollar goes to zero in 15 years. So every year it melts. It's like a freaking melting ice cube. If you don't flip that thing into something that doesn't melt, you're going to go to zero. You're going to constantly have to make more because it's going to zero. I got to even make more. I mean, it's going to go to zero. I got to make more because it's going to go to zero. And that's going to be your whole life on the hamster freaking wheel. Every now and then they'll throw you a little carrot while you're on your little wheel, like a little hamster on your wheel. They'll throw you a little carrot just to keep you comfortable there. Do you understand? But every year you'll have to run a little faster. And they might give you a little carrot and a half the next year just to keep you running faster. Then it might go to 2 carrots. Keep you on your little hamster wheel all your whole life. And at the end of 50 freaking years on this hamster wheel, you have nothing. Your family has nothing. Generations coming after you, if your family now has nothing, they have less than nothing. We have to break this cycle. We have to teach our kids to break this cycle. Do you understand this? It is a sacrilege to me that this is not taught in schools. Think about this. Our kids graduate, not even from high school, they graduate from university without a single lick of understanding about this. They're taught, they're educated to work for other people. That's all the educational system is designed to do, to have you work for the accumulators. Remember the history I told you of the human race. Remember the history of those who began to accumulate and those who didn't? Those who didn't accumulate have to work for those who accumulate in order to survive. And so the accumulators throw them the little carrot every now and then, but they have to keep working on their freaking little wheel. And if they don't work on the accumulators' wheels, they die. What side do you want to be on here? You want to be on you want me to give you a wheel and to work on? You don't want to be on that side. You'll have to work that wheel forever faster until you die with nothing. How many people are taught how to make the transfer from a freaking wheel runner to an accumulator? You see, if we taught our kids this, they would not be blowing money on stupid things like a $1,000 pair of shoes or a $1,500 Gucci belt. Are you freaking kidding me? Really? I would give I don't know if I should say this. My kids would get the Three Stooges slap if I ever seen them do stuff like that. You know what the Three Stooges slap is? Remember the Three Stooges? Like one would slap both of them with one slap. None of that nonsense in my house. Do you understand that? None of that nonsense. I don't put my money in other people's names. Forget that. I put my money in things that go up forever. And when those things go down, I put more in because I know they go up forever. I know that down is only temporary. And the news will try to scare me. Oliver, this is terrible. This asset's going down, but it's one of the assets I know will go up forever. So down is good for me. But the news will try to trick you that down is not good in those assets, to keep you on the wheel. Do you understand that if more people begin to make the transfer, this would not be so great for the plantations out there that need you to work on them. Yes, corporations have become the new age plantation. And the worker for a salary has become the new age slave. And the little dollars they receive for running really fast for the plantation, those are the carrots to keep them going. This is what our educational system is designed to produce. Who are the greatest givers to universities? Who are the greatest donators? Corporations that need slaves, corporations that need workers for dollars, for pesos, for yen, for euro. You understand? They give money to the universities, and because they need people who can, of course, read, write, but don't teach them how to become us. No. Please do not do that, or your funds get cut. No, we need obedient. Teach them these models. We use these models. Teach them this economic theory. We use this economic theory on our plantation. Do you understand? And then we'll have a job fair and have the soon-to-be graduates come around and fill out applications. It's crazy. Unreal. No one's taught to make the transfer. Do you understand? No one's educated to flip their freaking dying currencies into things. The only people who benefited last year are people who had their money in things, assets that go up. And if you held dollars, you lost 30% of your wealth. 30% more dollars were printed in 1 year. More dollars were printed in 1 year than in the entire history of the US dollar. That's crazy. Your dollars lost 30% of their value. Some people say it lost 38% of their value last year. But if you own stocks, you made 35% or more last year. If you had converted dollars to Bitcoin, you made 700, 800% last year. Gold is 94 years old, so we have to give it some slack. It's the OG of the group, right? It's the old goat, the OG, the goat, the Chibo, right? It made like 2%, but okay. All right. It didn't lose. All right. It's 94 years old. Give it a break. I bet with the youth, you know what I'm saying? I bet with the youth. All right, guys. I digress. I'm sorry. I get so freaking passionate about this. It bothers me that this is not taught to our kids who leave these universities saddled in debt. Which is, I'm sorry. Which is another freaking, how scandalous is this? In the United States, a decent education will cost someone, if you want a really good education, you're going to be in debt $200,000, $300,000. All right. An okay education, you're going to be in debt $70,000, $80,000. Right. Okay. Do you realize that corporations can file for bankruptcy protection? They get into some trouble because they were stupid. All right. They can file for bankruptcy protection and continue their operations without the need to pay, right, their debts. Do you realize that the very people that got educated and went into debt to work for those same corporations, the very kids that suffered through university. And some of them didn't suffer so much, but built up this huge debt to get a job. Go into debt to get a job? Really? They went into this massive debt to get a job at a company that can file for bankruptcy protection. Yet that person, if they get into trouble, can't file for bankruptcy protection with their university debt. Are you kidding me? So if the worker gets into trouble and files for bankruptcy protection, the debt from the university can't be included. Wow. So you better get to that wheel. Even if you file for bankruptcy protection, you best be getting to that wheel, young man, young lady, and start pedaling really fast, because we're going to keep you saddled in your debt, working for dollars your whole life. We're going to sell you a dream that you should buy a big house with a white picket fence, and we're going to teach you to live beyond your needs. We're going to teach you to have 6, 7 credit cards. We're going to teach you to finance your 1 to 2 vacations a year. We're going to teach you to be so deeply in debt that you will never be able to get off your wheel. And you will forever be on our plantation. Welcome to the plantation. This is crazy, guys. I'm telling you, this is maddening. All right. I hope you're getting as angry as I get. I can't even have this presentation so frequently because my blood pressure goes up. Do you understand what I'm saying? It's crazy. I don't like it. I don't like it. All right. Let's do this. Now, let's take a look at some facts here, guys. 1913 is really the year the US dollar came into existence. Yes, there was a different form of a dollar that existed before this, but 1913 was the year of the current dollar in a way. But this dollar was still portionally backed by gold. Now, it came into existence as a full dollar in 1913. Today, it's 2 cents. Think about that. If you saved $1,000 from 1913 to today, you'd have $20 today. Think about this. Let me put this here. $1,000 in 1913, if you saved it, it would be worth $20 today. That's insane. Silver in 1913's price was 60 cents an ounce. I've checked these prices today for you. Today, silver's price is $26.19. So while the dollar's gone from 1,000 from a dollar to 2 cents, silver's gone from 60 cents to 26 cents. This is wealth over the decades. Okay? 1913 gold's price was $20.67 an ounce. Today, I checked this today, it's trading at $1,787 an ounce. This is wealth accumulation. This is the rising of your wealth over time. You understand? Not the erosion of your wealth over time. 2010, Bitcoin's price was a penny. I checked this. Today, we were trading over $34,000. This is in 11 years. Guys, look. Check this out. Let me give you a statistic here. Let me give you a statistic. If you had put $1,000 into the US dollar And this year, today, it's $20, right? We already did that. Now check this out. If you had put $1,000 into the S&P 500, they didn't really have it back then, but the top 500 S&P 500 back then, but the top 500 companies back then, all right, S&P 500 back then, you would have, what's the number? I think it's $8.6 million, guys. That's crazy, right? 8.6, I think my number's right. $8.6 million. $1,000 all the way back in the early 1900s. Now look at the difference. 1,000 turns to $8.6 million over this time span. $1,000 saved in the US dollar. You've got $20 worth of value today. Okay, but get this. $1,000. I'll put the dollar sign here. In Bitcoin, today, 70 million dollars. Oh my God. Guys, in 100+ years, you would have made, in 100+ years, you would have made investing in the S&P and the stock market 8.6 million. That's nothing to sneeze at. But in 11 years, you would have made $70 million. Bitcoin's the new kid on the block. It is the future. Gold is the old OG. That's the old Chivo. That's the ancient veteran of the bunch. Silver too. And we know the US dollar's going to zero. It's almost there. Where do you think you got to be? You got to be here. The S&P and here. Do you get this? Do you understand where you got to be? Do you understand what you got to convert into now? Do you see this? You don't keep it here. You convert it to the S&P and you convert it to Bitcoin. All right, you want to put a little bit in gold and silver just because of nostalgia? Okay. You want to be nostalgic and get your 1 to 2%? Okay, fine. But I'm telling you, these are the two main things you need. You make your dollars, you convert to the S&P, you convert to Bitcoin, period. Tell me you understand this. It's not rocket science, all right? This is not freaking rocket science. Do you understand? Tell me you understand. I need to see you. I need to see. Are you picking up what I'm laying down? Do you get this? You make dollars. You convert to the S&P and Bitcoin. You make dollars. You live off dollars, but whatever you don't need, you convert to the S&P and Bitcoin. Do you have this? Is this rocket science? Thank you for telling me. Is this rocket science? Does that sound freaking complicated? Why can't they teach us that in school? Why? Why can't they teach our kids that in school? I don't get it. I don't get it. Makes me angry. So guys, listen, I am going to show you how to do this. I'm not going to leave you without that. Don't think just a discourse of trashing fiat currency. I'm going to show you how to do this. I'm going to show you. I'm going to give you a tactic. I'm going to give you a strategy. So whether you stay with me or not, You are going to be able to do this. All right? You're going to be able to do this. All right? That is what I want. Now, check this out. Stay with me, guys. Stay with me. I know it's holiday weekend for my Americans here, but stay with me. This can change your life. It changed my life when these light bulbs went on many years ago. All right? Okay, guys. Check this out. That's a picture of what the dollar has done just from 1950. Imagine, my God, just from 1950. And this is the beginning of 2020. The dollar is now down here. You understand? And this is just from 1950. Dollars have lost 90% of their purchasing power since 1950. That's crazy. People don't understand. Guys, look at this. Look at this is another way of looking at it. So guys, this is over, it looks like the last year or so, right? More or less. So look at the amount. Guys, I have to explain this to you. I got to explain this to you. I'm sorry. Got to explain this to you. Very quickly. I got to look at you to do it. I'm sorry. I need to look at your faces here. Some people don't understand the theft that goes on through inflation. Inflation is thievery. Inflation is theft. What is it theft of? Your time, your life, your very soul. And because it's ever so gradual, last year not so gradual, but usually ever so gradual in established countries, it's not felt. So it's the most dangerous form of theft. You see, there's a theft that is not as dangerous as another form of theft. Let me give you an example. So when is a thief at his most dangerous, at his most lethal? When is a thief at his most lethal? When he's not seen or felt. When you are asleep or away. When he is not seen, when he is in the dark. When you are asleep in your home or when you are away from your home. That's when a theft can do the greatest degree of damage. But when you turn the light on, a thief is in your house and you turn the light on and you see the thief, your eyes lock. Do you know what happens? The thief loses its power. Now, he's no longer a thief. The moment you see a thief, he has ceased to be a thief. Now, he's only got two choices: to become a runner or to become a fighter. But either way, he is no longer a thief once you see him. A thief can only operate when it is not seen, when he is not known, because inflation is not seen very readily by people, and it's not known by the vast majority of the poor. It is allowed to be the most lethal with them. It is allowed to steal their time. Do you know what I mean by time? You give your very time, your very life. You leave your home, you get on a bus, you take a train, you get in the car, you travel to a location, you spend 8 hours, 10 hours, 12 hours working. You come back on that train, that bus, that car. After a week of that, you get, in exchange for the life you gave, in exchange for the time you gave, you got pieces of paper. Now, let's say you got 100 of them. As long as the supply of these pieces of paper don't increase, this 100 pieces of paper stays the same. But if while I'm making my 100, there's 1 trillion more being made, the value of my time just got cut in half. You have stolen half of my time. You have taken away half of my effort. I gave you my life, and you are taking my very life away. I worked for this dollar. Now you're telling me that what I used to be able to buy with $1, I now need 2? What are you telling me, that I can't buy the same house that I was saving for over the past 5 years today? I was saving to buy this house for 5 years. Now you're telling me the price is double? You mean I have to get back on my wheel and work another 5 years to buy the price at today? You're stealing my time, which is my life. This is the greatest form of slavery and theft. Inflation is theft. And people don't, today, educated people don't understand the concept of inflation, and they certainly don't understand that inflation is theft of their time, of their very life. We're taught to not be emotional about our money, but how can you not be emotional about your money if your money, the dollars you have, represent the life that you gave for a week, for 2 weeks, for a month, for a year, for your lifetime? You were taught and told that if you were a good boy and a good girl, if you got good grades in school, if you went to university, and if you got a good job, you would be okay. But has that proven to be right today? No. What could you have bought 10 years ago, 20 years ago, 30 years ago for $1 at the corner candy store versus what you can buy for $1 today? I used to buy a slice of pizza coming home from school for 15 cents. A freaking slice of pizza in New York is $8. What happened to pizza? Wait a minute. Has there been some miraculous discovery in the making of bread? Wait, have tomatoes and cheese taken on cancer preventing properties or some stuff like that? What the heck happened to bread, tomato, and cheese to cause its value to go from 15 cents to $8? What? I used to buy a freaking cup of coffee for 5 cents. I go to Starbucks and buy a freaking Frappuccino for $9. Are you kidding me? Wait a minute. Is it coffee that changed? Or did my dollars just go down? Did pizza change from 50 years ago, 40 years ago, 30 years ago, 20 years ago, 10 years ago? Did pizza change, or did the value of what I'm holding change, go down? Did my dollar become 20 cents? Is that what happened? Or did pizza's value really go up that much? Is pizza more valuable than it was before? Or is it the same freaking thing? Well, if pizza's the same thing, then it's not the pizza that changed. People, this is the trick. People are taught that pizza went up in value. No, your dollar went down. Your dollar went to 20 cents. That's why. So now you need 5 times more to buy that same pizza. And so the trick is to keep you focused on the items that appear to be going up in value, but it's the opposite. It's the dollars going down in value. It's your fiat going down. In fact, technological advancements today make everything cheaper, aren't they? Don't they? Do you remember what a flat screen TV used to cost? Thousands of dollars. Now you can get one for $300. Remember laptop computers used to be like $12,000? Now you can get a freaking laptop for $400. Remember computers used to be thousands of dollars? You can buy a computer for $200, $300, $400 on sale today. Technology should be causing items to go down in price. Why? Then are they going up in price? They're not going up in price. In fact, everything's going down in price because of technological advancements, because of greater efficiencies. Everything's going down in value, but it doesn't seem like that because your money is melting to zero faster than these prices are declining. And if you don't get that in your head, you will never be wealthy. Oliver, never say never. You never know, Oliver. Mom, sorry. There it is again. I'm saying never. All right. Inflation is theft. Those who learn how to combat it stop being poor. All right, let's get to it. This is the Federal Reserve making you poorer in 1 year. Like, guys, if they kept it the same, your dollars would be worth the same. But every time they create more, your dollar value goes down, 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 down. You've got to you better run on that wheel faster, you little cute little hamster. If you're going to run on it, at least be cute with your Gucci belts. Yeah. And your designer clothing. Yeah. Keep running on that hamster wheel. At least look good doing it. There's the money printing over the last 5 years. I showed you one. Here's 5 years. You getting poorer and poorer, poorer and poorer. Your dollar's going down more and more. I didn't create this chart. Guys, they're so embarrassed by this that they stopped updating it. They stopped updating the chart. That's right. They stopped providing the information to update it. You don't see 2021 here, right? Do you see 2021 there? Because they're so embarrassed. This is way off the chart now. I'm showing you up to here. You don't see 2021 here over the life. Guys, this is when the current version of the US dollar came into existence in 1971. Your dollar was on par because it was attached to gold. In 1971, it was detached by gold to gold and became a fiat currency. This is the birth of the fiat dollar. Before that, it was a quasi dollar backed by gold, but now the complete detachment from gold happened here, meaning that now from this date onward, the dollar just is the dollar and it is not backed by another item. And since then, this is what has happened to the dollar. Supply. This is the federal debt, right? Now, check this out. This means that as this goes up, those who have everything denominated in dollars experiences the opposite. Right? That's crazy. That is crazy. That's the whole picture right there. Of course, it stopped being updated. So this is more like this now. Because why is it more like that? Because more in the year 2020, this whole history here, in the whole entire history, more was printed in 2020 than ever in history. So they knew that this was going to go off the charts, was so embarrassed, they stopped providing the info. And they announced it. We're no longer providing the info. Blatant. in your face. We don't care. We're just not giving you the info anymore. We don't want to see any more of these charts. This means that this is what's happened to your wealth that's denominated in currency. And this year, like that. Okay, guys, very quickly, let me get to the strategies. But here is silver from 1913. So notice the booms and busts. You seeing the booms and busts? But over time, still up. It's 6,000 years old, so don't expect it to be running like it's 24 years old or 13 or 12 years old like Bitcoin. Don't expect it to run like that. It's 6,000 years old, all right? It's an OG, all right? Gold is an OG. And people say, Oliver, I don't, the volatility of Bitcoin, guys, look at the volatility of gold. What are you talking about? That's not volatile? All right, it has its bear periods just like Bitcoin. Everything does. You got to put your big boy pants on here if you're going to play this wealth game. But you got to know, as long as you know over time, it goes up. What do? When it drops below its median line, you start accumulating more because you know which assets go up over time. All right, you want to take some off the table when it's way above its median line. Okay, that's fine too. But the way you accumulate is to come in here on the collapses of only assets that go up over time forever. All right? Look at Bitcoin. Now, I could only find data all the way back to 2004. Late 2014. This is 14 here. But look, it's even lower down here because remember it started at 0. So all right, it gets above the median, drops below, gets above, drops below, gets above, just like all assets do. Right? But you don't get afraid of these in an asset that is designed to go up forever. You see, there is a real desire for you not to get this information because they need you on that hamster wheel. Do you understand? They need you working. They need you working harder and harder every year. They don't need you becoming wealthier and wealthier every year so that you work less and less each year. They need you working more and more each year. This is the brand new version of slavery. It's not the old version of slavery. That was inefficient. This is a more efficient form of slavery, where you gradually work harder and harder for less and less. And if you start becoming wealthier, you stop working harder. That doesn't benefit the system. Do you understand that, traders? Do you understand that if you make this transfer, you stop benefiting the system? You start working less hours as you become wealthier. Less hours. Until you don't work anymore. The system lost a slave. That's why you're not educated on this. That's why you're not taught to do this. That's why our kids go into debt and don't even get educated about this. It's designed to keep you working. It's designed to put you in. Owning a home and being in debt for 30 years was one of the biggest lies in the world. I'm not saying owning property is wrong, but saddling yourself with debt for the rest of your life, can you believe that was marketed as good? Wow. That's crazy. Live beyond the carrots that we give you. Right? Stay in debt. You'll have to work forever. This is what's taught. Debt is taught. And when people start saving and not buying stuff to cause the stocks to go up, right? Right? We need you to take what you make and buy stuff so that we continue to get wealthy, but you have to keep working. And we don't want you saving it. We don't want you converting it. We want you spending it. You know why? Because, again, you will stop participating in the setup, in the system. Now, get this. In order to ensure that you don't save, we're going to take interest rates from 18% on savings accounts, and we're going to drop them to frickin' zero. Now you can't save even if you wanted to. You better go spend it before it's less. Do you see the game? You used to be able to earn 18%, 15%, 12%, 10% if you saved something. Now it's like, what are these people saving for? We need to get that money. Yes, we gave it to them. They worked for it, but we need them to put it back into the system. Why are these people saving? I have an idea. Let's just frickin' drop the interest rates to zero. So now they can't save. And let's just keep them there. Let's keep them at zero. No, in fact, let's take them negative. There's $200 trillion earning negative interest, which means that $200 trillion is paying a banker to hold money. So what is the system telling you? Don't save it, spend it, keep assets going up. This is why you need to become an asset owner, because this money needs to keep going into assets if it is going to survive. All right. I know, guys, I'm just finding all different types of ways of saying the same thing. But I've learned in my educational career, right, that repetition has a huge value, and hitting a point from different angles resonates with different people differently. And so there's a lot of people here. So that's why I do it. Okay, guys, we have to be careful with the stock market, because the stock market can generate wealth for us, but it also goes neutral again. So unlike Bitcoin, which will go up forever, unlike gold, which has gone up for thousands of years, the stock market is one of those that will go up for decades, but also go down. So we have to be careful. We have to bring a little bit more timing into our analysis with the market, but it's a great wealth generating tool. You just have to know how to play it and to sidestep these parts of the cycle. Now let's talk about that a little bit. All right. Now listen, all fiat money, fiat declines in value. All paper markets, stocks rise and decline. All right. So this is more of a neutral market, but it has long periods of rising and then it'll come back. This will just go straight down. See? So you see the difference? So money, this one, just goes straight down. The paper markets, like the stock market, goes up and down. So we have to use them, but we use them a little bit more carefully. All right? These markets only go up. Okay? And so the world has made it where we earn in the worst item. You understand? We earn in the worst item, which means, and most poor people stay here. They earn and keep the worst item. But those who start to get it take a percentage of this and move it here and move it there. So so let's do it like this. Let me show you. So they take this and let's divide this into 3, right? 3 parts. 1. Let me do it a different color so you can see it. So we got 1, 2, and 3. So you use 1 to live. Get yourself where you're going to have to live with fiat currency. You're going to have to buy milk and soda and go out to dinner and go to the movies every now and then and take your vacation every now and then. You're going to have to do that with fiat. That's fine. But we need to take a portion of that fiat and get that thing into stocks. And we need to get a portion of that into Bitcoin. And so you look at your fiat in 3 parts. The fiat to live with, the fiat to go into stocks that go up and down. But we need to take advantage of this up part especially, because this just goes straight down and this goes up forever. You see? So with the stock market, we escape the down. We escape the down because it will go to neutral again. Bitcoin will not go to neutral. Gold will not go to neutral. Real estate will not go to neutral. It will go up forever in various degrees, right? So the down is not as concerning while it's going up. The down here is concerning because if you are not careful, you will wipe out all that you earned on the up. So this one takes a little bit more care. This one takes the least care. Down is escape here. Down here is buy here. And that's the difference. And that's what I teach my people. All right. Now, here's what we need, guys. Now, I had to lay all of that, guys. I had to lay all of that. And I know it was long. I apologize about that. But this is a very important topic. I don't want you shortchanged on this. You understand? I don't want you shortchanged on this. So what we're going to cover now, listen to me carefully. This is what we're going to cover now. Why can't I get this? There we go. This is what we're going to cover now. I'm going to teach you how to do this. I'm going to tell you what you need. I'm going to explain the strategy to you. It's not going to take me long. So we're on the last part of this, right? I'm going to teach you what you need, the tools, the specific tools, very basic tools. All right. I'm going to teach you the strategy so that whether you stay with me or not, you'll be able to do this. All right. Maybe not quite as well as being with me, but at least you'll be able to do this. And I'm telling you, after this presentation, you're going to be so head and shoulders above most of the people out there sloshing around in the markets. All right? That is my promise to you. So let's get going. It's not going to take me long to do this because it's not rocket science. All right? I can't lie to you and say that it's all so super complicated. No, it's not. All right? You'll be able to do this. So what we need a monthly chart. That's it. Whatever asset you're looking at, when it comes to wealth, we're going to look at through the eyes of the monthly chart. Now, there are times I do look at the daily and the weekly. I'm not going to go into that. That's when you're mine. But for right now, we're going to keep it simple. We're going to stick to one time frame. That time frame is the monthly chart. Everything you look at, gold, silver, real estate, Bitcoin, look at the monthly chart. You look at the stock market, monthly chart. You understand? Everything's the monthly chart. I use a candlestick chart. I think they're more visually revealing. Okay, so we need a monthly candlestick chart of whatever we're looking at. That's item number 1. We're going to put a 20-period simple moving average on that item. Okay, yes, there are exponential moving averages. They are weighted, triangular. I've found no evidence throughout my 40 years in the financial markets that these sexier varieties work any better than simple, so I keep it simple. 20-period simple moving average on the monthly chart, 50-period moving average of the monthly chart, and a 200-period moving average of the monthly chart. These are the 4 things we need. You need nothing else. Okay? These 4 things in your beautiful faces. That's it. Let's go. Now, I'm going to show you an example. This is a chart today. I grabbed this today for you. NASDAQ 100 index. Look at it over the last 10 years, 11 years. It is obviously in that. Remember I told you that markets do this, right? So it's in this part of the stage. Now, you can't say that the NASDAQ from the monthly perspective is here. You can't say it's here. So you have to say we're sort of up in that area. So we don't have a lot of time left here in relationship to what has already transpired. Okay? So remember, all stock market items must have this other side. All right? But we're currently here in the cycle. Now, okay, this is a monthly chart. Every bar represents 1 month of trading. The green bars are obviously the months that rose in value. The red bars are obviously the months where we started on the first of the month at one price and ended up below that price at the last day of the month. The green bars, we started out that month at a certain price on the first of the month. In the last of the month, we ended higher. All right, that's what would make a green bar. Okay, now we're going to put a 20-period moving average on this chart. Boom, there's the 20-period moving average. You see how interesting that is? All right, look how interesting that is. Boing, 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 boing. Don't think that the little slips are meaningful. They're not. The 20-period moving average is like a freaking rope. You can lean on it. It's a boxing rope. Oh, he's against the ropes. Boom, he swings back. Boing. Oh, he's against the rope, swings back. So 20-period moving average, very important item on our monthly chart. Okay, now we're going to put a 50-period moving average on this as well. Boom. Uh-oh. Look at this. Now, this is really interesting. Look at the times that the NASDAQ slips between the two brothers. The 20-period moving average is a brother. The 50-period moving average is a brother. They're brothers. They work together. Look at how when the NASDAQ slips between them. Look at each time the NASDAQ slips between them. This is really interesting. You seeing where I'm getting at? It's not rocket science. You can tell where I'm leading here. Okay. Now we're going to add that 200 on there. Now the 20 and the 50, they work for the 200. So here's the 200. The two brothers work for the 200. There's the 20. And here is the 50. Now, I want you to notice something here. Notice when they're all kind of tight together. You see, look at each of the items. Look at the 200, look at the 20, and look at the NASDAQ itself. You see it? Very tight together. That's the beginning. That's the beginning of a cycle. When they're tight and they start to move away from each other, you've just started the cycle. Now, look at the four items now. They're wider apart, much wider apart. So if stock markets do that, they might make a higher high here, you see? That's fine. But eventually that's going to come. So we are obviously in this cycle, but where in this cycle? Are we here? No, that would be here, right? Do you think that we're here? No, I would say that would be more like there. And I would say that we are probably more like there right now. Tell me what you think. All right. So remember, this is micro. This still might have some time. I mean, this is macro. I'm sorry, not micro. This is macro. We still might have some time before this happens, but understand where you are in this cycle. When people say we're just starting another bull run, are you stupid? Really, you should laugh at anyone who says that. We just started a brand new bull market. Really? No, brand new bull markets start from narrow. They don't start from wide. Do you understand? Know where you are in the cycle. This is very important. And we do this with these moving averages and the 20-period moving average, the 50-period moving average, and the 200-period moving average. We use the item in these three moving averages. And we look for opportunities when the item comes to one of them or between two of them. So we come to one of them, to one of them, to one of them, to one of them, between two of them, between two of them, to one of them, between two of them. It's not rocket science. Let's play my color game. All right. Now, if you have the intelligence of a 12-year-old, you can do this. All right. If you don't, I would say no. If you have the intelligence of a 10-year-old, you can do this. Now, if you don't have the intelligence of a 10-year-old, you come back when you do. All right. You need to have at least the intelligence of a 10-year-old. It's okay. You might need more time. It's okay. We all develop at different rates here. The color game says trade in the direction of the 20. So if your item, if your asset which you're looking at through the eyes of the monthly chart has a rising 20-period moving average, you're going to be a buyer. If your asset has a declining 20-period moving average, you're a seller or a short seller. Play with the 20-period moving average. Don't get cute. Don't try to be fancy and play against the 20-period moving average. Don't try to bet down when the 20-period moving average is rising. That's a losing game. The 20-period moving average is rising. You're a buyer at the 20 or between the 20 and 50. But as long as it's rising. Now, we're going to buy the color near the 20. So if your 20 is rising, we're going to buy what I call a color change near the 20. That's near the 20. You see, that's near the 20. That's near the 20. You're going to buy a color change also between the 20 and the 50. So let's say this is the 50 now. And this is you're going to buy between. So sometimes you don't get between, you just get to. Sometimes you don't get between, you just get to the 20. Sometimes you don't slip below the 20, you just get to the 20. That's fine. But sometimes you slip between the 20 and the 50. You buy that too. Sometimes you slip between, but we need a color change. So what's a color change? We need a red bar to be taken out by a green bar. Boom! That's the color change right there. I'll repeat that again. Let's go over it again. Here is a red bar. Here are red bars coming down. Let's do it. Let's do our 20-period moving average. I want to show you this. So here is our 20-period moving average. Here is our 50-period moving average. Right? Now, we need color change at, here's a red coming down to the 20, and we're watching closely, and boom, green trades above the high of a red bar, a red monthly bar. These are monthly bars, remember? Boom! Once it trades higher than a red monthly bar near the 20, that's a buy. Okay? We also will do that if it keeps going and slips between, and then green takes out a monthly between the two moving averages. So you have the color change at the 20, the color change in between the 20 and 50. Now, I know somebody's asking, Oliver, what if it keeps going down? You do nothing. You do nothing until it gets all the way back to the 200. And let's say that 200 is way down here. And if we get that drop way down, and there's a color change somewhere near here, we start the game from here. Boom. So you got these three items. You've got the 20, the 50, the 200. We're playing off the 20, color changes. We're playing color changes between the 20 and 50, and we're playing color changes at or near the 200. And that's it. We're doing this in assets that go up over time. We're doing this. We want these assets to drop. That's what gives us the opportunity. We don't want to be scared of the declines. We want to use the declines. Why? We want to use them with confidence because we know over time they go up. We don't want to do this with assets that go down over time. So the first thing is to know the assets to do this with. I taught you that. The second thing is to know when to strike. I just taught you that. Now let's go over this. Let's go over what I have done. Guys, look, check this out. This is what I've done here. I have been working with a group of 300. I have almost 600 now, but I initially started with 300, a little more than 300 wealth traders. This is going back to 2009. Why did I start them at 2009? Do you remember the chart? Because the items were close together. The 20, the 50, the 200 were like this, and all items were like this, narrow and tight. And I believed that we were going to go to a market that started to grow and spread apart, and we have killed it. Do you understand? It's been just words can't explain. This decade has been the biggest decade of my life. And last year was the biggest year of my life. So if I had the best decade and the best year last year, remember the acceleration to the upside because of money printing happened in a huge way. Money printing, which will never stop. Money printing raises assets. Money printing lowers currency. I'm going to repeat that. Printing more dollars raises assets. Printing more dollars lowers the value of currency. Do you want to hold currency or do you want to hold assets? But Oliver, I make currency. That's why you have to flip the currency to assets that go up, because money printing is not going to stop. Not today, not next month, not next year, not never, ever. Money printing has never stopped in the history of mankind. In the history of mankind being able to produce money, to print it, it has never not been printed, never not been increased, and it never will, ever. So we must put our money into things that can't be printed like that. Assets. And the printing of those dollars will float those assets up. That's how you become wealthy. It's all about converting. Okay? It's all about converting. Now, let's get back to this. Boom. These are the wealth plays using the same tactic that I just taught you, that we've been able to, just a small handful. Guys, there's hundreds of these over the past few years. I'm going to show you a small handful. Apple. Now, guys, I've owned Apple for 20, almost 30 years, 26 years and change or whatever. But check this out. I continue to add to Apple. Look at where the items are here, relatively close together. So look at when Apple dips between the two in color changes right there. Boom. Green flips the red right there. Boom. Green flips the red right at the 20-period moving average right there. Boom. Green flips the red right between there. Green flips the red. Flips the red. You don't have to be touching, just near it. Flips the red. Now, a lot of people say, well, Oliver, do you ever take profits? Yes, but never down to zero if I have the right asset. So I might take profits when we get away, too far away from the moving averages, too far away from the moving averages, too far away from the moving averages. Do you see those aways? Away, away, come back to Bobby. Away, come back to Bobby. Away. Okay, now come back to Bobby. Away. You see? Now come back to Bobby. I know, I'm silly. My kids have told me, Dad, you stopped growing up when we were born. I was like, no, I stopped growing up before you were born. Sorry. Adobe. Look at when the items were close. Look at now. All right. We can still get wider. Don't think we can't. We can still get wider. This is still has time, in my opinion. But in this case, we only got a few opportunities to add on the color flip here. You know, only a few. Boom. Away. Away. You get the point. These are all these my wealth traders, we kill these things. We kill these things. Away, get back in. Away, get back in. Away, get back in. Get back in. Away, come to Papi. Venga pues. Facebook. All right, guys. Now, Facebook went public here. I didn't buy it. I told my wealth traders, we're going to wait for this to drop below $20. And we got it right here. Boom. We kept adding. Kept adding. You can add here, and it dropped a little further, but that's okay. That's okay. We keep accumulating. Boom. Color change in between. Color change right off the 20. You don't have to be. Boom. Away. 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 Come to Papi. I like that. Google. You get the point. This is boring now. Boom. Boom. Away. Away. And I teach traders how much to sell, what portion to sell. We never sell down to zero. Not in assets that go up over time. We sell, we take profits, but never down to zero. That is a losing strategy when it comes to wealth accumulation. We accumulate. That's what it's called. Guys, NVIDIA, we're in NVIDIA at $9. We're in NVIDIA at $9.50. NVIDIA is $800 today. I have traders that have retired off of just this play right here. Not many opportunities to get in since then. Away. So you know what they're probably doing now, right? You know. Okay. Microsoft. We're in Microsoft at $24. Okay? Off the 20. Off the 20. Off the 20. Off the 20. Away. Off the 20. Crazy. But Oliver, why are we not getting any pullbacks back to the 20 anymore in these things? Because of the printing of dollars. You see that? You see that spike? That's the pandemic. Now, we had a reaction back to the 20, and now because of the printing won't even let them come back to be bought again. That's what the excessive printing of dollars does. It stops them from coming back. It creates a false rise in assets, which is why you must own them. You must own the assets that benefit from dollar printing. Space, don't forget space. When we get excessive spaces, we have the opposite of the narrow state. Now, I believe there's still more here, but we're not in the middle, and we're certainly not in the beginning, and we're not in the middle anymore. You understand? So you got to know where you are in the cycle. And yes, there are ways to benefit on the downside too. So we're not afraid of the downside. Now, this was the NASDAQ all the way back in 2000. Look at the narrow state over here, narrow. Now look at the wide state. Right? And what happened? You know what happened in 2000. Boom. So we go right back to narrow again. See? The narrowing. This is why you got to be a little careful with the equity market. Okay? You got to know where you are in the cycle, because it will do this on you and go back to narrow and repeat. So it will go this and then that, and it'll be narrow. See? Narrow to wide. Back to narrow again. So these will be your narrow states, and repeat. Narrow state to wide, back to narrow. Now, these might still go up over time, but you've got to know which state you're in. Are you narrow or are you wide? Are you narrow or are you wide? And if you're not narrow or totally wide, where are you here? This is what's the key. This is what I teach you. Are you in the beginning of this, in the middle, or at the end? Are you in the beginning of this, in the middle, or at the end? And conversely, are you, if you're down, are you in the beginning, in the middle, or toward the end of down? And if you can put all of that together, man, we can get very wealthy playing these moves. Now, guys, look. I've taught you all of this to tell you, yes, I do have a wealth program, but also I know everyone can't do this. I've got 600 plus people doing this with me every week, every month. But I will tell you that I understand that this program is not for everyone. I understand that everyone who even wants to do it may not be able to do it. It comes at a cost. But I believe that cost is so small compared to what you are going to gain. And I also want you to understand that in this program of mine, this wealth building program, it is for life, which means that you and I, we work together forever. That you know every move I make, every buy, every sell, every asset I'm doing. I show you what I'm doing with my money. You see my buys. At times, you see my sells. You see what I own in your face. We spend time together. We search the markets together. We discover the opportunities together. You learn how to do it just in case I get hit by a bus. You are never alone. We walk this wealth accumulation journey forever. And I will tell you, traders, I've done extraordinarily well with this. Over the last 30 years, I've done enormously well. Last year being my biggest year ever. Last decade being my biggest decade ever. And I believe going forward, especially with the introduction of Bitcoin in the play, it's only going to get better. The printing is at an accelerated rate, which tells me that it's only going to get better. Printing raises assets. Assets create wealth. Currencies create poverty. Now, this program is normally 4,000 guys. The 300 who started with me in 2009 paid $10,000 for this program. But the US dollar has eroded, so now it's $4,000. That's right. The program is the same, if not even more valuable today. The dollar has eroded. So the dollar's eroded from 10,000 to 4,000. You get every buy, every sell. We study together live. We meet together live. You know every single thing I'm doing. Forever. This never stops unless you stop. This is not there's a part 2 and a part 3. This is for life, forever, year after year, decade after decade. We do it together. But listen, look at this. If you want to add the Bitcoin Club for 5 years, the total is $6,000. So I like people to kind of put this together. Now, I know that might not seem one, but guys, one play can make you a fortune if we get it right. If we get so many right. One play could make you 5,000, 10,000, 20,000. So, but get this. For the next 48 hours, it's $2,000 for everything. Guys, do me a favor. Take $2,000 and divide that into a month cost over 5 years. Guys, that's crazy. Think about that. $2,000, what's the monthly cost? Let's say you're going to dedicate 5 years to increasing your wealth, and you should, way more than that. You should dedicate the rest of your life to doing that. But let's say for the next 5 years, you're going to focus on building wealth so that 5 years from now, financially, no one's going to recognize you. You're going to be wealthier, richer, far ahead of where you were, and certainly far ahead of most people who simply wake up every single day and just hope their life changes miraculously, but they do the same thing. That's what most people do. They wake up every day just hoping that I hope today is different from yesterday. That's it. And they spend their whole lives just waking up and letting life happen to them instead of making life. They wake up every day and allow life to happen to them, but they don't wake up making life what it's supposed to be. So if we take $2,000 and we divide it, all right? There's 12 months in a year times 5 years. That's 60 months. We take $2,000 and divide it by 60, and you get $33 a month. Are you kidding me? Do you understand? This is how my mother taught me to judge whether something has value. Break it down. I'll tell you a quick story. I got to tell you the story. I'll tell you the story, guys. Look, my mother bought her first home. I don't know why I can't ever get rid of this thing here. My mother bought her first home back in 1974. 1974. She sent me to my grandmother's for 1 year. So I lived with my grandmother for 1 year. You know why? So that my mother could work 3 jobs. So she knew that by working 3 jobs to save to buy a home, all right, that she was never going to be able to be a good parent. So she sent me to live with my grandmother for a period of time, 1 year. Now, my mother told me that she created the savings plan, right? She said, look, I love Snickers bars. She does. I have a Snickers bar story. You should search for that video. She loves Snickers bars, and she loved Coca-Cola at the time. No more, but Coca-Cola at the time. And she had a Snickers bar and a Coca-Cola every day. She said that if I work these 3 jobs and I refrain from spending anything on Snickers bars and Coca-Colas, I'll be able to buy my first home. Sent me to my grandmother's house, and for a year did not buy a Snickers bar, did not buy a Coca-Cola. She saved up the grand total of $3,000. 1974, $3,000. She took $3,000. She put it down on a $30,000 home, 10% deposit on the home. She went down south, picked me up from my grandmother's, and we drove into this brand new home. Now, years later, in the 1980s, my mother would sell that $30,000 home for $380,000. Now check this out. What happened to the home? Did the home go up in value? No, my mother never added another floor. She never added more property. She kept it up, but she didn't increase the number of bathrooms. She didn't lace the house with gold. No, the house stayed the same. If anything, you could argue that the neighborhood went down in value. It was the dollar that went down in value. But my point here is that my mother taught me to break the cost of things down to micro level, like a Snickers bar and a Coke. My mother saw a house through the eyes of a Snickers bar and a Coca-Cola. She broke the cost down and said that if I save this amount of money and do not spend money for a Coke and a Snickers bar, boom, the value of this home is broken up into these pieces. So I encourage you to do that today as well, traders. You take this cost. This program is like my mother's house that she wanted to buy, right? She wanted to buy this house. Now, she needed to, $30,000 looks huge for her, but or $10,000 looks huge for her for a down payment, but she broke it down. And so I'm telling you to take this, break this down over 5 years. You gotta give yourself at least 5 years to do this, to get this right. You want to be 5 years from now dramatically different, dramatically higher, dramatically wealthier. Otherwise, what are you living for? What are you doing? What are you doing if you're not exponentially higher 5 years from today than now? What are you doing with your life? And so this is a $33 a month. Guys, you throw away $33. A good bottle of wine is more than this. A dinner is more than $33. A movie is more than $33. Break that cost down and you will see the value. To be together, to be with me, to know every move I make, what I'm doing, how much money I'm putting here, what I'm putting it in, when I'm putting it in, why I'm putting it in, to study together forever, not just 5 years. I'm telling you to do it over 5 years. If you do this over 10 years, like my last group in 2009, the cost is almost negligible. $48 hours, guys. $2,000 for the Bitcoin Club and the Trade for Wealth Club. That is the two parts I told you we need to convert dollars into. The Trade for Wealth is the stock portion. And then we need the Bitcoin portion. Do this. This is your time, guys. Your time. Let's do this. Where were you 5 years from today? And where are you today compared to 5 years ago? If you're not happy with that, we can fix that. I know that my state 5 years from today is going to be dramatically higher than it is today. I want you to take that journey with me. Let's take it step by step. Let's do it together. Let's study together. Let's look at world markets together. Let's go in and out of things together. Let's learn together. Let's grow together. Let's get wealthy together. It's time. It's time to do this. For yourself, for your family, and for the family that's not even born yet. Generational wealth, baby. Yeah! Thank you. I love you, my babies. Cuckoo gaga. Cuckoo gaga. Cuckoo gaga. How cute you are, guys. You're all so cute. Que lindos. Woo! I love it. Ciao, guys. Love you. Love you. Ciao for now.